Time now to turn our attention to some business news, and we start with always with a look at how the markets are doing. Wall Street, three main indexes there, all ending in the red, just slipping below the flat line, as you can see there. Among other things, investors keeping an eye on that US fiscal stimulus, growing concerns that the proposed $1.9 trillion package may struggle to get through Congress. Meanwhile, let's take a look at the main figures on the main Asian indexes. As you can see there, the Kospi and Seoul down 0.5 percentage point, but the others in the green. The Hang Seng in Hong Kong up 0.1%. Well, we can speak now to market analyst at FXTM, Han Tan. Han, COVID-19 fears or a focus on that US stimulus package, what's playing into the figures we're seeing on the main indexes?
Sure. So I think that investors are paring back some of the optimism surrounding the next round of U.S. fiscal stimulus, right, which according to the latest commentary might only arrive in mid-March. So there's some risk aversion creeping back into the markets, and that's why benchmark indices like the S&P 500, they are really struggling to climb substantially higher, and investors are reverting back somewhat to the pandemic play that they love so much, hence the gains in tech stocks that we're expecting when U.S. markets open today.
The Federal Reserve's latest board meeting takes place later today. What will traders be hoping for?
Yeah, I think traders will be looking for more certainty. Certainty about what the Fed's tapering plans will be. So the Fed Chair Jerome Powell has to come out with a calm and clear signal to the markets. And I think more importantly, a signal that markets can actually believe in, because if you take into context the rhetoric from Fed officials and Powell himself, recently saying that it's too soon to be talking about tapering, yet markets are still trying to price in, or they're trying to expect otherwise. So you've got yields on 10 years that are still above 1%. You've got the US dollar that is still supported. So I think, it boils down to us having to wait and see whether Powell can really dampen the tapering talk.
Growing talk, Han, meanwhile, of a forthcoming market correction, growing concern that some have been hitting highs and are now headed for sizable drops.
Yeah, it's a risk, but I don't see it as a big risk at this point in time. I mean, granted, the U.S. stocks are trading at some extended valuations or overextended valuations. But I think overall, given what we've discussed here, right, the lingering hopes of a fiscal stimulus, the Fed's accommodative stance, you've got the vaccine rollout around the world. So all that creates a supportive environment for stocks. However, when it comes to some individual stocks, I can see how the price movements have been really irrational of late. So I think those are the ones that are poised for some major volatility, but perhaps in the near term, but perhaps not so much for the overall asset class.
Han Tan, market analyst at FXTM, thanks indeed for your time. Well, it's been a dark year for champagne producers here in France. Last year, sales plunged 18% compared to 2019 as coronavirus restrictions shut bars and other drinking venues around the world. Claire Rush takes a look at that story.
Champagne falling flat. Sales of the celebrated French sparkling wine took a serious hit last year, plunging from 300 million bottles sold in 2019 to 245 million bottles sold in 2020, a drop of 18%. As a result, annual losses could reach €1 billion, according to the Comité Champagne Group, which includes producers and distributors. It's a blow to France's domestic and export markets. Sales slumped 20% in France, as well as in Champagne's top two export markets, the US and the UK. To blame, the coronavirus restrictions that shuttered bars and restaurants and banned large celebratory events for much of 2020. Industry representatives say a decision in July to limit production in order to support prices prevented the product's value from taking a more precipitous plunge. The outlook for 2021 isn't too rosé just yet, but prospects could bubble up if the pandemic is reined in and countries start easing restrictions.